Hey, what's up, everybody? It's Monday, July 29th. I hope everybody had a nice weekend. I went fishing. Here. We caught some snook. We caught some snapper. What else? Redfish. Gulf trout. Supposedly that's what it's called. We had a good day. Caught a lot of fish. No keepers. Had to throw everything back, but it was still a lot of fun. All right, let's talk about what's going on in the market. Quiet day today. We got a lot of activity this week. We got a Fed meeting on Wednesday. Nothing's going to happen at that meeting, but the Fed will probably announce or lean towards announcing that they're going to do a rate cut in September. That's 100% priced in right now. We see that in Fed fund futures, and we know that the Powell Fed, they just always follow whatever the market says. You know, I've mentioned this many times in the past, almost to the point where I have said, like, what is the purpose of the Fed if you let the market dictate, where policy should be? The Fed is a monopolist. It has power over the markets. I use the analogy, imagine John D. Rockefeller, back, in the heyday of his business of Standard Oil, if he would go around and ask his little competitors, hey, what price do you think I should set my oil at? No, he crushed them and he put them out of business, and that's why he was a monopolist. And the Fed has that same power. I mean, it dictates, or it sets rates. It doesn't have to ask. It doesn't have to follow what the market supposedly wants. But anyway, that it's totally understandable, because these are a bunch of monetarists who run the place, and most of their theories, most of their thinking, the way they think, the way they see policy, as we've seen so many times, it's backward. Now, I'm looking forward. And I've been telling you guys this, I'm excited because I can't wait till these rate cuts start. And like I said, we're going to come back and revisit what I'm telling you guys, at some point down the road, because for the monetarists, this rate cut, I mean, I see headlines now, they're hyperventilating, they're so excited, that a rate cut is finally going to happen after 2 years. Like, for them, it's the ultimate panacea. Like, it solves everything. The rate cut, in their minds, it solves everything. They've been waiting 2.5 years. They got decimated with the rate increases because they got that completely wrong. They were shorting the market. They were forecasting recession. That never happened. I told you that wasn't going to happen. They did the same thing with Fed reducing the balance sheet. And I said that was going to be a bullish thing, that, leave those securities in the economy. The Fed doesn't need it. I mean, it should be obvious now that the Fed doesn't need it. The Fed is running with negative income, negative equity, and it has no problem whatsoever to continue crediting interest payments to the banks. And basically, it has no real money, but it has this unlimited power to credit, banks with reserves. And so it doesn't need to suck up all the government securities that were in the economy to hold for itself. And then anyway, it just turns those profits over, the interest profits, it just turns it over to the Treasury. It's the most cockamamie, like Rube Goldberg thing that you could possibly think of. All right. So it's better. That's why I said when the Fed was going to reduce its balance sheet, how was that not going to be good? It's going to leave those interest-bearing securities in the economy. So anyway, I'm telling you guys, or I've been telling you guys, that this rate cut excitement is not going to play out the way the monetarists think. I've told you this now for many weeks. I'm going to repeat it. Repetition is the way people learn. I'm going to continue to repeat it. We're going to come back and revisit this, down the road when it starts to play out, as I'm telling you how it's going to play out. The rate cuts are not going to be what the monetarists think they're going to be. I mean, they're going to be rate cuts, but the effect on the economy is not going to be what the monetarists believe. Mark my words. We'll come back and revisit that. But, you know, there is a lot of expectation for this. Again, it's built into the market. With Fed Fund futures pricing in basically 100% that there's going to be a cut in September, and there's going to be a cut in November and a cut in December. Not 100% in each of those individual months, but it's getting up there. It's getting up there. So we're finally going to get our rate cuts this year, and you're going to see what's going to happen. And so we got the Fed meeting on Wednesday. You got some earnings reports that are coming out this week. I think you got Apple tomorrow. You got Microsoft on Thursday, I believe. So everybody's kind of sitting and waiting for those earnings releases. Remember, the last couple of earnings reports that we got, like from Google, from Amazon, from Tesla, those, we didn't get such a good reaction off of those earnings reports, okay? There was some caution built into the outlook. Investors took those reports as, you know, somewhat, you know, on the negative side. So it's going to be interesting to see what comes out of Apple and what comes out of Microsoft. I'm focused on the process right now. And by the process, you know, I'm not paying attention to price of the market averages. There are individual stocks that are coming down to attractive levels. And selectively, I'm buying those stocks. I put out a bunch of emails today to subscribers with some names that look good right now on the pullback. But when I say I'm sticking to the process, it means that, look, slowing economy, we got the rate cuts coming up, which I have been telling you that the 5 pillars of spending, the 5 major pillars of spending, which is Social Security, Medicare, Medicaid, defense, and interest payments. One of those 5 interest payments is about to undergo a change in policy. And the other 4, still strong, still powerful, still leading overall spending flows. But the interest payment, and it's going to be very subtle in the beginning. It's not going to, as a matter of fact, I think when the Fed actually does cut rates, you're going to see a pop in the markets just because even though it's expected, you're going to see the monetarists are going to jump in. People are going to jump in who aren't even monetarists. They could be, you know, just very casual investors that hear it on the news or read about it and they say, oh, I better buy stocks because interest rates are being cut. But these people are Johnny-come-latelys. They're late to the party, they're late to the action, and I bet anything that most of these people were selling out stocks from their portfolios back in 2023 or in late 2022 for sure. I mean, I know this anecdotally because I had it told to me. People were scared and I can't take it anymore, I'm going to sell out. See, I look at it a totally different way. Like, I get excited when the market goes down, because to me that's like good stocks on sale. People panic out, they sell. That's the environment, that's the scenario that makes me want to get involved. And vice versa, when I see, you know, everything is rosy, everything is fantastic, you know, they're going to cut rates, rate cuts are always fantastic and bullish. You know, I mean, wild horses couldn't stop me from betting against that. And so it's kind of like what I'm doing right now. Yeah, so going to be a busy week and see what happens. It's about it for today, folks. I can't think of anything else. Oh, please like and subscribe if you've already done that. Thank you very much. It helps the channel grow. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See everybody tomorrow. Bye.